Hi everyone, we're Matt and Chelsea. We're the owners of Hancock Real Estate, and we want your real estate experience to be a great one.
In our last video, we talked about the concept of mortgage forbearance, what it is and what it isn't. So we wanted to follow up with that video and kind of explain a little bit more about why professionally we don't advise you to take the forbearance, but if you have to, what you can do to protect yourself.
All right, now let me take a moment and issue this disclaimer about mortgage forbearance. It is our professional opinion that you should not take the mortgage forbearance just to take it. You should not do that. If you need to take it, then you need to take it. But we don't want you to take it if you can't, because we think you'll be harming yourself in the long run.
So there are a couple of reasons why we believe it's not in your best interest to take a mortgage forbearance. The first one has to do strictly with the repayment plans. Remember from our last video, forbearance is not forgiveness. You still will owe that money at some point.
Yep.
We're seeing lenders issue what's called a balloon repayment. So what that means is you take 6 months of forbearance, so you don't have a payment for 6 months, but on month 7, at the end of that term, you will not only owe month 7, but you will also owe months 1 through 6 as well. And that's a lot of money at once.
Yeah, the second reason we don't want you to take advantage of this mortgage forbearance is if you are planning to sell your existing home and buy another one in the next 18 months to 2 years, if you take advantage of the mortgage forbearance, you're skipping a payment. And to qualify for your next mortgage, you have to prove that you've made 12 on-time payments. That's just the true case with anybody, any of our clients at any time. So you wouldn't be able to prove that, and you would not qualify for that next mortgage, and that's a problem.
Yeah. Okay, so there are some other options besides mortgage forbearance. So for example, if you have money in savings, if you have a 401k, if you have a Roth IRA, that's your money. So it'd be better for you to borrow against that money to remain current than to do the forbearance.
That's right, and then your credit's never affected whatsoever. So again, our disclaimer, we don't want you to use the mortgage forbearance. However, there's no judgment. If you need it, you need it.
Yeah.
And that's why it's there. And so we want you to protect yourself if you do need to take advantage of it. And here's some things we can go over with you to protect yourself.
Yeah. Okay, so the first, you have to call your lender to tell them you want to take advantage of the forbearance. When you do that, ask for the terms in writing. The next thing, when you get those terms, make sure you read them. Read the fine print. Make sure you know what the payback is. Because remember, it's not forgiveness.
Right. So if you understand that and you agree to the terms of your forbearance and you're comfortable with the payback idea, then you have to monitor your credit report on a monthly basis to make sure that your lender is not reporting to the credit bureaus falsely, because mistakes do happen.
Mm-hmm.
That really could happen, because that could jam you up. It shouldn't be reporting negatively on your credit. If it does, you've got it in writing that says it's not, and you've got the plan that you complied with, and you'll be able to fight it.
Yeah. So we're Matt and Chelsea. We would love to be your realtors. If you have any more questions about forbearance, send us a message, give us a call, and be happy and be healthy.